Hello everybody, first quarter 23 updates. I pretty much did a big REIT sell fest in this quarter, which is quite funny because in the last quarter of 22, I went on a big REIT buy fest. So now I'm reversing a lot of what I did. So I think in general I sold 60% of my REITs. So as of late last year, I think my REITs concentration was quite high. It actually went to more than 50% of my total portfolio. And now with this quarter, I sold roughly 60% of my REITs down. So that's gonna reduce my REITs concentration by quite a fair bit actually. So look at the treasury yield curve moves, right? This is nuts. This is the 2-year yield curve. Went to above 5%, then went to below 3.8% on the banking crisis. Now it's hovering around 4% up and down, and it's just moving crazy every day. It's just completely random. I think the market is just too complacent, I think, at these levels. You can see that the REITs has also been moving upwards to the extent that some REITs are actually able to do placements and to raise equity at pretty attractive levels. I think this is a signal that the REITs market is somewhat overpriced, especially for the first tier REITs. So I went on the big sell fest. Starting on the late February actually, start to sell MIT and then rotated into E-Logos REIT at a pretty low level actually, 0.33, and this was before the distribution, right? So effectively I'm buying this stuff at the rights issue price already. Then I sold FCT at 2.2, now it's much higher actually. Then I sold MLT at 164, now it's also much higher, and they actually managed to raise some equity around these levels as well. Then I sold Landlist Global at 0.7. I was quite happy to sell everything that I have in this REIT. I think the clearing of this guy is actually very, very high, and the rates moving higher will have quite a big impact on this guy. Then I sold Ascendance REIT at 2.82. And then after that, I sold Impact at 1.82. So I sold pretty much a lot of REIT, right? 1, 2, 3, 4, 5, 6, 7. And I didn't sell part of it though. I sold all of it. So like everything that I sold over here, I sold all of it. And with that, I brought my REIT portfolio, cut it by more than 60%. I added some more of ESR Logos REIT though at 0.32. So actually I bought it below the rights price already. So I bought it at 23 on the 23rd of March. I think that's quite a good buy though. I'm still quite confident that the rejuvenation of the portfolio of the REITs, the property portfolio of ESR Logos is going to be quite fruitful. So net overall though, I sold 60% of my REITs. Quite happy I bought it actually. So why did I sell the REITs? And why did I sell those REITs that I have? Basically, very simple. I just look at the number one and most importantly, the gearing level, the financial strength, right? If the REIT is geared at more than or equal to 40% and the ICR is less than 2.5 times, the REIT has to be sold at this level. I think the market is too complacent, and if the REIT is geared up quite high, and I think the Fed is not gonna just cut rates anytime soon. I don't think they're gonna cut rates this year actually. The effect of the rate hikes and the 5% Fed funds rate is gonna flow into the balance sheet very significantly by end of this year. So anything more than 40% the gearing and the ICR, which is not comfortable, I will sell it. So that's why I sold the land lease and the Impact and FCT. And I think also if the REIT is expensive, so meaning the trailing 12-month yield is less than 5.6%, I will also sell it. So that's why I sold A-REIT, MLT, MIT, FCT. Because once you have the impact of the rate rises kicking into the books, I think next year we're gonna have around 10% drop in the DPUs. Once the effect of the 5% Fed fund rates come in, even with REITs in Singapore having hedged a majority of their borrowings, the impact on DPU is still going to be quite substantial. So if the trading 12-month yield is less than 5.6%, I will also sell it, which is why I sold a bunch of stuff earlier. I'm not selling everything though. I kept the good REITs like AIMS, APAC, and Star Hill. I think in general the first tier REITs are quite expensive now. The second tier and maybe the third tier REITs are still quite depressed, some of them. And especially for the second tier REITs, I think AIMS Impact and the Star Hill are really too undervalued to be sold. At these levels, these two guys are still yielding you more than 6.5%. This guy is more than 7%. This guy is probably around 7%. There's some negative news about the master lease trying to break the lease and stuff for one of the properties for Star Hill. I'm not too concerned about it. I still think this is still quite a very good REIT with very good properties. So overall, first quarter of 2023, I went on a big sell fest for REITs and reduced my REITs concentration of the portfolio. So quite happy about it. I'm now all cashed up and ready if the capital markets start to crash and burn again.